Today I'm going to talk to you about one of the best pieces of advice I can give to anybody who invests in stocks. Always buy with the intent to hold. Salutations, fellow investors. My name is Mark. This is the Stealthy Wealth channel. If you're not already subscribed, please hit the subscribe button below. I would really appreciate it. And also give me a thumbs up. That kind of helps me with the YouTube algorithm. Anyway, today we're going to be talking about a philosophy that I live by when it comes to buying stocks and figuring out what stocks I want to buy. And that is to always buy with the intent to hold long term. I am not a swing trader. I am definitely not a day trader. Whenever I'm buying a stock, I am thinking long term. I never buy a stock that I can imagine possibly selling it within a 3-year period. It's always about buying a stock for the long haul. And when I say 3 years, I mean that's on the short term. I usually intend to even hold longer than that. So why is that my philosophy? Well, one of the most important reasons is when you're making a long-term investment of any kind, whether it be a house, a car, a stock, whatever it is, when you're making that investment long-term, you are far more likely to put in some homework to make sure that you're making a good decision. Folks who engage in day trading, for example, they're not really concerned, or they're usually not really concerned about whether they're investing in a good company or not. They're just trying to figure out whether the stock price is going to go up or down and try to get in when the stock price is low and get out when the stock price is high. And to me, that seems like much more of a gamble, and I'm not into gambling. I'm into making smart investments. And there's several things that I look at. Some of those things include looking at the management, upper management in particular. That makes a big difference. If you take Tesla, for example, a guy like Elon Musk adds a lot of value to a company like Tesla because he's such a visionary, because he's somebody who's not complacent. That's another thing. You want to find a company that has a path to growth and doesn't seem to be satisfied ever with just kind of coasting. They want to grow, they want to expand their business. That's very important to have a management team in place and to be invested in a company that is always hungry for more growth. Another thing you want to look at is profitability, or at the very least, a path to profitability. You can invest in companies that are already very profitable and you see potential in a lot more growth to their profits, or you can invest in a lot younger companies that aren't necessarily profitable yet, but you see a path to profitability. So a lot of folks like those growth stocks that aren't necessarily profitable yet or are very young in their lifespans yet and have a lot of growth ahead of them, because that opportunity exists for a lot more growth very quickly, and that tends to get reflected in a faster rising stock price. And that's okay. Those are a bit riskier stocks, but they're not necessarily bad stocks so long as you're doing your homework. A riskier stock can still be a good stock. It can still be a good place to grow your money quickly, but you got to do your homework. A good balance sheet is another thing you always want to look at when investing in any company, and in particular if you're investing in one of those companies that isn't necessarily profitable yet. I see it all the time from YouTubers and other investors who don't necessarily do their due diligence, do their homework, and they invest in very young startups that aren't profitable yet. They're hemorrhaging money, which doesn't necessarily mean that it's a bad company. A lot of young companies spend a lot more money than they bring in, at least to start with. So a lot of times I find that investors who don't do their homework will invest in a young company that only has enough cash on the balance sheet to cover about a quarter's worth of losses that they've, at the rate that they're blowing through money. That's not a good thing, because whenever you invest in a company like that, you know they're going to have to come up with more cash from somewhere, and a lot of times that involves issuing more shares and diluting the value of shares that are already out there. That doesn't bode well for somebody who wants the stock price to go up. So again, it's always very important to look at that balance sheet, see what the trend is quarter to quarter and year to year. Are the losses getting smaller, or even better, are the profits growing and growing? If you don't see those profits yet, you need to see a path to profitability. What do their margins look like? What are they projecting as far as sales? That also goes into it. You also want to look at the overall industry that the company is in and where they fit in it. You want to find a company that is a leader within their industry, one of the best in whatever it is that they do, or a company that may not be at the top yet, but is bringing something new to the table that's going to change the industry and make the company a leader within their industry. So those are some of the things that you're going to want to look into when you're investing in a company long term, not just for a day or two or not just for a few weeks. If you're going to be investing in a company for many, many years, all of these things are going to be important to you. And once you've done that research, and once you've found a company that you pull the trigger and you buy those stocks, now you actually got to stick to your philosophy and not sell. Spoken from experience, it rarely turns out in your favor if you sell a stock of a company that you still believe is good. You can fall into the trap of these FOMO moments of, well, I do like this company that I already hold stock in, but you know what? I think this other company that I also like might grow a little quicker, so I'm going to sell out of this one and throw my money into that one, and I'll come out ahead. That sounds very logical on the surface, but I gotta tell you, for some reason, it doesn't tend to work out very well when you sell the stock of a company that you really think is good because you found another company that you think might be a little bit better. For some reason, it just doesn't work out. So that is the main reason why I only buy stocks that I intend to hold for the long term, for at least 3 years or more. It pretty much guarantees that I'm going to do my homework to make sure that I make a wise purchase. What do you think? Do you agree? Do you disagree? Do you actually think that swing trading or day trading is a better way to go? Let me know in the comments below. And if you enjoyed this video, please give me the thumbs up. The YouTube algorithm hates me. It's not going to show my video to anybody unless I get some thumbs ups on my video, as well as some participation comments below. So if you do that, I would greatly appreciate it. And that's it for this video. So I look forward to the next time we meet.